Okay, so last week was dramatic. Quarter end selling, wash effect, jobs report whipsaws. This week, on the surface, kind of boring. MBS drifted lower and Treasuries drifted with them. But here's what makes this week interesting. MBS lost about twice what the Treasury move alone can explain. And by Friday, we got hints as to why. Here's a scoreboard. MBS finished down 53 basis points for the week. The 10-year rose 7 ticks. So on the surface, MBS just followed Treasuries a bit lower. But here's the thing. That 7-tick Treasury move should have translated into about 30 to 35 basis points of weakness on MBS. We got 53. That's close to double what the Treasury move alone can explain. And that gap is where the story is. So why did MBS underperform? Treasuries by that much this week. This is one of those things that nobody explains well. So let me break it down for you. Mortgage-backed securities and Treasuries generally move together, but they're not the same thing. Treasuries are backed by the US government. MBS are backed by pools of mortgages, which means MBS investors have to think about something Treasury investors don't. If rates drop significantly, homeowners refinance en masse, and your MBS pays off early. If rates rise quickly, the coupon you're holding looks less attractive against a new higher rate MBS. Either direction is risk. This week, MBS investors were pricing in the possibility of a faster than expected rate hike. And when investors get nervous about rate hikes, MBS underperforms Treasuries by more than the math would normally suggest. What triggered this? By Friday, we got hints. The ceasefire we've been watching in the Middle East started showing cracks. Missile activity picked up, and here's the market logic. Renewed conflict raises oil. Higher oil raises inflation. Higher inflation makes it harder for the Fed to cut and increases the probability that they might have to hike. That whole chain pushed MBS lower, even without any Fed announcement. So this week's story isn't MBS crashed. The story is MBS underperformed Treasuries roughly 2-1. And by Friday, Geopolitics gave us the main reason. 3 things to watch next week. First, does the underperformance continue? If MBS keeps losing ground faster than Treasuries, the market is genuinely repricing hike risk. Second, oil prices and Middle East headlines. This is now the primary driver. Third, CPI inflation data comes Tuesday. Hotter than expected, accelerates everything we saw this week. Cooler might give us a reset. Thanks. Have a great week.